Hello to all our friends out there in financial advisory group world. We're here today to shoot number 8 of Rapid Fire, episode number 8. So we're getting
Yep.
closer to that double digits thing. How's summer been, Ben?
Summer's good. A lot of things transpired, I guess, since the last time. I think it's been a good 3 months since we put out an actual rapid fire. So I went to San Diego for the LPL conference. Saw some cool people. Check out our Facebook if you didn't see the updates. Um, and I guess what's the other big news? Taylor Swift got engaged. I guess
Oh
that's
yeah,
the
I forgot about that one. That's
yeah.
massive. That's market moving news,
Yep.
yeah.
So things are
Yeah.
good. But football's starting tonight. I'm looking forward to that. Now we're recording this before, so this is Thursday. I'm looking forward to the big game tonight, the Eagles Cowboys showdown. But Damien, I'm assuming you have some predictions for the upcoming season.
Yeah, I think if we look at, I guess first we'll get into predictions, then sadly, as most of you probably know, I'm a Las Vegas Raiders fan. So we'll talk a little bit about expectations. I guess when it comes to predictions, I always have a hard time of who I want to win or who I think will win. So quick answers, right? Who I want to win. I really think I'd like to see the Bills or Ravens because I think Josh Allen and Lamar Jackson deserve it. They're amazing people to watch play the sport. Who I want to win it, of course, is the Raiders, but well, again, my expectations are realistic. How about you to turn it over?
Uh, well, again, I'm an Eagles fan. I will say I did make a bet with a client about the Eagles season last year, and I actually went to it was one of the first games in Florida versus the Buccaneers, the Bucks, and it was a miserable loss. So I assumed going forward, like my expectations were terrible. I was like, there's no way the Eagles are doing anything decent. Ended up great season. Not sure they can repeat. So that's my biggest thing. I would love for the Eagles, to win another Super Bowl, but my pick is the Detroit Lions.
Wow.
I'm
Okay.
always like slightly, I'll never pick whoever's favored in odds. So I'm
Yep.
always slight underdog. I think Jared Goff's gonna get it going this year.
All right. Well, and I think this is recorded, so we have it. It's on record before the season started, and I think that leads into sort of our first thought of markets right now is, and I think our two teams are very different expectations, and I'll lead with the Raiders. Right, we haven't had, let's call it, any like sense of success for, let's call it, close to 20 years. So for us, our expectations are so low. And I think when it comes to the market, right, that can have a massive impact on how the market does. And I think if we're going to make this analysis, and I'll go with my Raiders view and Ben can go with the Eagles view, is, when expectations are low, a 9-8 record is amazing. That's literally, I would be thrilled. And I think that's part of what happened to the market back in April when the tariff stuff went on, is expectations were lowered for the entire market. It's like everyone said, "Holy cow! We have no idea what this tariff impact is going to be." The market took this big hit, and expectations got lowered. Well, Ben said it before with the Eagles. If your expectations are lowered, that makes it easier to beat. So we had expectations lowered, making it easier to beat those expectations, and the market rallies off of that. So I'll go back to, like, I'll pose the question to the end to Ben of, if the Raiders go 9-8, am I happy? Oh my God, yeah. I'd be thrilled if the Raiders have a winning record. I'm guessing, Ben, your answer is if
Yeah,
the
not
Eagles
not
go
so
9-8,
much.
you're firing the coach.
If the Eagles go 9-8, not so happy. And think back, if you're an Eagles fan, you remember they won a Super Bowl, and then the next season, Doug Peterson, he got the boot. I mean, they still had a winning season. It wasn't anything extravagant. And he just didn't make the cut. So again, like the Eagles, they have a hefty load on their plate this year to kind of repeat or at least get close to where they've been. And that kind of leads into the market too. Expectations are high. I don't know, Damien, if you want to touch on kind of why expectations have been so high.
Sure, and I think that's the main thing we'd want you to take right now is markets are great, right? We're happy with where they are, and we'll talk in a minute as to why they are where they are. But keep in mind our expectations have been ramped up. So when those expectations, like the Eagles, it's going to be hard for them to meet expectations. Where back in April, when expectations got lowered, it was an easier bar to clear, so easier for the market to rally. So to get back to sort of, Ben and I will have a little back and forth here because we think there's two things sort of fighting the market, right, or sort of going on within the market. One is, and I'll take the corporate side of it, is why is the market high? Man, because things look great when you look at the corporate side of things. As we show here up on the screen, you'll see that earnings, which is the number one thing that drives markets, are at all-time highs. And if I could just simply tell you one thing, that earnings are at all-time highs, which is how companies tell you how they're doing, and their predicted run for the next 12, 24, and 36 months are to continue this path and hit all-time highs. Well, Ben, where should the market be?
Probably be high. Yeah.
Probably at an all-time high, right? So with that's my sort of lean into it is that, if you look at right now, earnings estimates are very high. Earnings themselves, we just came off the best quarter ever for earnings. So while some people look at this and say, I don't get it, oversimplify this. Earnings are high, the market's high, it makes sense.
Yeah, and it's kind of like a tale of two cities. Again, Damien said we're going to have like a back and forth. So like corporate balance sheets, corporate spending through the roof, amazing. It's like snapshot in time, things look great. What I would counter to that is that there are some things, dissolve it. So like trends, when we're looking at economic trends, there's snapshots and trends. Trends are like looking forward or even historically as well. And the one thing you've probably heard in a lot of our videos, we always default to saying everything relies on the consumer. If the consumer feels good, the economy is probably going to have, a good, next 3 to 5 years. When the consumer feels good, they feel confident in their job. They're going to spend more at Christmas. They're going to book that trip in 2026. All that money flows back into corporations. That's how earnings continue to grow. My counter to Damien is the consumer is, showing some signs of a little bit of weakness. Looking at just this kind of snapshot, the jobs are trending in the wrong direction. We still have growth. So every quarter, every month, they publish growth. And we're still having growing jobs, but it's less and less growing over time. So the trend is kind of going in the wrong direction for that. That could lead to corporations pulling back a little, maybe mass layoffs. So you never know. We don't know, and we're not going to predict that, but it's just showing you that there are some little bits of cracks. And again, there's other trends on here, but mainly we're focused on the jobs. And then also to lead into this to show it more in a graph form, if you've remembered a couple videos back, Damien had a great analogy about the bathtub. So if the bathtub is filling up, that's all the people that are unemployed and the drain's like, can they get employed? So like that's kind of growing. The bathtub's getting fuller. And if you depict in this chart to kind of relay it back to what we're seeing is you see these upticks in the labor force. So it's people that are not in the labor force, but they do want a job. And the uptick kind of precedes and also looks like it's indicative of previous recession. So that's one thing that we would just say, job market not the greatest right now.
Yeah, I would agree. We talked about the bathtub analogy is it's not that the layoffs are picking up, it's that it's taking longer for people to find jobs, right? So I'll give you that one, right? It's definitely a little concerning.
Hmm.
And I think this goes back, right? The flip side though, this AI spend story isn't going away. Now, it might go away at some point, but right now it isn't. So if you look in real time, some of these numbers are astonishing. And I think it's important to just take a quick look at them. Two companies that are two of our top holdings for clients, two companies we love, and you've probably heard of both of them, Microsoft and NVIDIA. Both of these charts, and the numbers aren't sort of, you don't need to focus in on them too much, show the revenue. Microsoft's Azure, which is part of their cloud business, their revenue run rate over the last, call it 7, 8 years, and then NVIDIA's revenue run rate for their data centers over the last, call it 4 or 5 years. The charts almost look fake, right? Now they're real. The revenue these companies are bringing in is unbelievable and almost never seen before. So again, if you look at this, yes, there's some things that are scary out there, but the corporate side looks so strong because of this AI spend. Sure, it could stop at any point in time, but right now, frozen in time, this AI spend is unbelievable. And the part that hits me most on this, right, is you look at these revenue run rates, Ben, and they look almost fake. That, NVIDIA's revenue back in Q1 of 22 was $2 billion. Now the AI story is under full sort of exposure. You look 3 years later, that revenue jumped to 20+ billion in just in 2020, Q1 of 25, and going to be 40 billion soon. We're not talking doubling. We're talking up 10, 20, 30 times. So their profit margins on this revenue is north of 50%. So there's your argument for yes, we've seen some signs, but I'd argue back, Ben, that man, corporations like Nvidia and Microsoft just look amazing at this point in time.
Yeah, I think I would give you that one too because again, the AI story isn't like we wouldn't say it's a bubble. There's real earnings to support some of the growth we're seeing in those stocks. And again, that's like mostly the growth in a couple names, Nvidia, Google, Microsoft. There's still a lot of companies that haven't even utilized, touched anything with AI. So you're going to start seeing, I would think, some more creative margins from all the other companies that maybe can be more efficient with the use of AI, all of that. So there's definitely some good signs. It's not all bad. The only thing that I would kind of conclude with as well is just now this is short term. We're always looking long term, but just we like to always. Damien and I love charts, so this is an interesting thing. It looks at all post-election years. And usually the like August to October timeframe is some of the worst for historical earnings and stock market performance. And again, we've seen like this. You can see in the light blue line, almost a straight line up. And that's kind of getting to our golf analogy. If you birdie 3 holes, probably bogeying the next one. For me, I'd probably hit it into the maybe a pond once and then some high fescue the other time. So I might be getting more than a bogey. But
I think
regardless,
you've been playing
that's
Royal Manchester too much, thinking of high fescue.
I think so, yeah. But either way, who knows what's going to happen? This light blue line could keep going, but just based off of historical numbers, we're heading into what would be seen as kind of more of a choppy environment.
And again, I give it to you short term. I think that gets back to expectations. You can have two thoughts going at the same time that, man, things look great, but also short term, we could be due for a little blip, right? You can believe two things at one time. And I think that's where we'd agree. I think to counter that and to sort of end our back and forth a little bit, I think one thing that Ben would agree with is don't fight the market. The data up on this chart just tells you everything, right? That the average bull market lasts over 5 years and goes up 250+%. The average bear lasts about 1 year and goes down about 31. Yet we always try to find the next bear market. We always, well, it's coming. Well, it's coming. One of the famous lines, I forget who said it back, is that there's more money lost in preparing for bear markets than there is in the actual bear market itself. Just let the market work. Be prepared, right? That don't get so caught up in when's the bear coming. Just be prepared. And I think that would be our strength right now is just let this market run. Sure, it might struggle at some point, but that's normal. We're going to be prepared for that.
Yep.
Um,
Yeah, and I'll
so
give you that one too. I'm certainly, even though we had the whole devil's advocate thing, I'm certainly long-term bullish. I think adopting technology is great, and over time, it's going to be beneficial to the economy, and we're always in a better place in the future. So throughout any point in time, we go through a little rough patches, but I will say I will bet on the bull. I'm not I'm not betting on
there,
the negative 31. I'd rather bet on the 254.
look at the blue, not the red, right? And I think as we wrap up the video and sort of get back from our back and forth, we were trying to figure out who we could ask sort of to give us an answer of who's right, Ben or I, right? We were going to go to like the geniuses of the day, which of course would be like ChatGPT, which is, you should ask ChatGPT everything. But we thought of someone better. We went back to a market analyst. His
Hmm.
name, as you might have heard him before, is Billy Joel. And he has a favorite song called You May Be Right. And we just want to use this quote of, Ben, you may be wrong for all I know, but you may be right, right? I think it just shows at the end of the day, we don't know. And our answer is to be prepared. I think, Ben, you would agree with that. Is that we're not trying to figure out what's happening. We just want to be prepared for whatever path comes. And I think, again, when we can reference back to Billy Joel in a video, it makes me pretty happy.
Yeah, maybe next video, since we're starting to get some more views, we might be able to get Billy Joel on the podcast. We'll have to pull
Wow.
some strings.
I guess
Um,
speaking of views, I guess, Ben, do you want to give a shout out to our last video?
Sure, yeah. So Damien and I, again, not we're not just chart nerds, we also love data and we follow our YouTube data pretty religiously. And Mary, on our last video, if you haven't seen it, it goes over all the new tax bill, the changes, how it would impact our client base. Make sure you watch that. But it's at I think it's 381 in terms
Closing
of
in on
views.
400. Yep.
That closing in on 400, and that is now our highest viewed video. So congrats to Mary. It's a great video. Make sure you check it out if you haven't.
Yeah, and I think to end, I think right, I think the in general, who knows where this thing's going to go, right? I think um, our answer is be prepared as always. I think as Ben hinted, we give a shout out to Mary. It makes me a little worried, Ben, that we put Mary in a video and she blows away our numbers. Maybe we should be worried. But we'll hope to have Mary in a couple more videos coming up. We hope everyone has an awesome, I guess some people say summer's over. Technically, it's not over. Whatever you want to call this time period, enjoy it. The weather, oh my God, the last month in the Northeast has been gorgeous. So hope you've enjoyed it. We look forward to a great summer and end of summer, fall coming up. And again, as always, we appreciate the trust and confidence you have in us. We look forward to seeing you again soon, talking to you again soon, or seeing you virtually. In the meantime, enjoy life and make it a great day.
Happy fall. Enjoy. See you for Rapid Fire 9.